This video and this information could change your life. Just sit back, relax, and treat this video like a podcast and just pay attention. Hear me out for just a few minutes. Enjoy. In this video, I'm going to be breaking down the safest portfolios to have. Listen, very simple math, very simple charts, and extremely high probability and extremely low risk. Ladies and gentlemen, boys and girls, how are my snipers doing today? Now listen, today I have a very, very important video in terms of investing into the safest portfolio. Because look, some people are new, some people don't know, some people are scared, but they want to invest. So I'm going to show you everything you need to know without making it overcomplicated on what is the safest portfolio going into 2024 and 2025. All right, ladies and gentlemen, this here is a Bitcoin chart. Right now, I pretty much used a very, very basic tool to indicate where Bitcoin has a high chance of going, right? Based off this tool. So for simplicity's sake, we're going to use this tool in this video, but just note this doesn't necessarily mean this is my price prediction with Bitcoin, right? This is just to show you that a high probability scenario so you understand how much money, right? If you put in a certain amount, how much you should be getting in return based off a high probability, right? So we can see Bitcoin right now is down here at about $63,000, and I believe is going to go somewhere into the blue box, right? So pretty much in general, it's a 2 times from here, okay? So with that being said, let me show you one of the scenarios, right? Let's say we are dealing with $10,000, right? In this scenario, you have option one. Option one is to put everything in Bitcoin, right? So if you were to put 10,000 in Bitcoin times, pretty much just say get 2 near the peak, you would get roughly $20,000, right? Very, very, very simple. Now, why is this pretty much the safest thing you can do? Well, Bitcoin is the #1 coin. So the thing is, right, if Bitcoin were to die, everything else is to die. That's it. That's that simple, right? If Bitcoin dies, that means everything else died in crypto. So this is like the one coin you can go all in on, because if it does fail, that means the whole thing just collapsed, right? Very, very, very simple concept. Number two, we can do Bitcoin and the second biggest coin in Ethereum. Now, I drew up pretty much a similar chart, right? Ethereum's actually at a premium price right now. So when you're watching this, if you're watching this, within, I don't know, like now and like the next couple of weeks, Ethereum's actually at a very good discount price. So if you were to pretty much buy Ethereum from where it is, you could expect about a 3.2 times return in a very realistic, conservative scenario. So let's go back to scenario 2, right? I'm pretty much going to be putting in $5,000 here, right? $5,000 in Bitcoin. And then I'm going to be putting $5,000 in Ethereum, okay? So this first biggest coin and the second biggest coin. Now, the reason why I think this is such a great thing to do is because, well, for one, right, if Ethereum, let's say in some world, Ethereum were to die, but Bitcoin weren't, at worst, right, you pretty much times 2 your money and you break even at $10,000, right? In a hypothetical world, if Ethereum were to completely die, right? Worst case scenario. The next case scenario is Ethereum does good. So we do times 3.2, and let's just show everybody, right? $5,000 times 3.2, so everyone sees, is $16,000. So we have 16,000 plus the 5,000. What does that make? Oh, sorry, we have 16,000 plus the 10,000, which equals $26,000. And the risk is, it's not even like that much higher. It's very, very minimal, right? Because we are taking the first biggest coin and we're taking the second biggest coin, right? You have to remember, it's very, very unlikely the second biggest coin is going to die or do extremely poor. That's just how it is, right? So based off that, if you're willing just to put a little bit more risk, a drop of more risk, you can get an extra $6,000 because as you see, we were getting 20,000 just from the initial investment in Bitcoin, but in this scenario, we would be getting 26,000, an extra 6,000 on top for a drop of extra risk. Now, before I continue, this is pretty much how a normal risk to reward chart looks like, right? Pretty much you start, right? And in general, it's kind of going to be the higher the risk, the higher reward in general, right? Well, in this scenario, right, if I were to draw it out, risk being the bottom, reward being the side, right, it's actually a little different. So the reward doesn't necessarily start at the bottom. It actually starts a little higher. And just for a little bit more risk, you actually jump up a good amount of reward before it kind of goes to its normal type pattern, right? Normal type scenario. Why? Because in this specific context, you are literally risking a little bit more for a big gain, for an extra big gain. So it kind of does this, right? Now, there is another option where you could pretty much do just Ethereum, right? So if you did Ethereum in this scenario, right, the second biggest coin, you put in $10,000, right? And it was what, a 3.2 times scenario. So, I'm just putting this out there so everyone can see. 10,000 times 3.2 is 32,000. I know I can do the math simply, but here's the proof, okay? So we do times 3.2, and then we get $32,000. Now, this is great because you actually get an extra 6,000 on top of the last scenario, and you get an extra 12,000 on top of the first scenario. But the reason why I put question marks is because in case we are in a reality where Ethereum would die, you are a glass cannon. Okay? What does that mean? You're pretty much putting everything in one asset. So in some messed up scenario, if Ethereum were to die, you would lose all of your money or a lot of it, right? But now the probability of this happening is literally in the 0.000. Like you got to understand how many zeros there are, but I'm just putting that out there, right? Technically, the reason why this is a little bit higher, the risk is because of a scenario if Ethereum died. But like I said, it's like 1 in a billion. Like you would actually genuinely have to be super unlucky. Like I'm not even kidding right now. You probably have a better chance of getting struck by lightning than this happening. Okay, I'm not over exaggerating. So that's why I put the question mark because I'm like, there is technically that scenario, right? But overall, if you don't think anything's going to happen because the odds are literally 99.9999999% on your side, then this is fine, right? You get an extra 12,000 from the initial money you put in, and an extra 6,000 from scenario 2, right? So 20,000, 26, and here pretty much 32,000. Now, this is the last and final portfolio I would do for the safest altcoins is pretty much do something like 30% Bitcoin, 35% Ethereum, and 35% Solana, right? Solana is also going to be around 3.5x. It's a little bit higher than Ethereum, and it could reach 4x in a very realistic scenario, but just because I rather shoot under than a little bit potentially over, I'm going to say 3.5x, right? So let's break it down, right? You put in $3,000 in Bitcoin. You put in 3,500 in Ethereum, and you put 3,500 in Solana. Okay? In this case, you get $6,000 back from Bitcoin In this case, you get, right, 3,500. Let's just put it out there. I know I could do math, but just so you guys can see, 35 times 3.2, 11,000. Oops, 11,200. 11,200, okay? And this one's a little messy. Get out of here, boy. Bang! Okay? And then this one, you get pretty much 3,500 times 3.5, so 12,250, okay? So you could see not that much greater reward than this, but it's still an extra $1,000, right? So here you get the total, right? If we put all of them together, is plus 11,200 plus 6,000. So $29,450. So you can see in terms of the top three best scenarios, right? This being number one, this being number two, and this being the third one, right? This one could debatably be third, right? But this is the one with the question mark, so we're gonna put this as fourth, right? Here you get 20,000. Here you get 26, and here just you get an extra couple thousand, right? Go from 26 to 29,450. And the reason why I like this is in a hypothetical like scenario, if one of these were to drop, right, Bitcoin would pretty much break even for one of them, right? So Bitcoin would pay off, let's say Ethereum died, right? In some scenario, Ethereum died, right? So you don't get this money, rip this money, but pretty much Bitcoin would break even for Ethereum, and then you still get your Solana money, which would cover a little bit of the losses plus an extra 10K, right? So you have an extra coin that pretty much gets the same reward as Ethereum almost, but now it's like if Solana dies, doesn't matter because Ethereum and Bitcoin will make up for it. If Ethereum dies and Solana and Bitcoin live, boom, right? If Bitcoin dies, the whole market's dead anyways. So you see how this portfolio here, 30% Bitcoin, 35% Ethereum, and 35% Solana, is actually the best case scenario in a very, very high probability where you can make a lot of money, pretty much 3x in your investment if things go the way I said. But that's it, pretty much, ladies and gentlemen, right? Just know Bitcoin is the number one coin. Ethereum is the number two coin, and pretty much Solana is like the number fifth coin. And if you're not counting a stable coin, it's actually pretty much fourth. So you're getting the top five coins, one, two, and like four, pretty much. So that is it. This is the key to be making a good amount and very extremely safe. Okay, remember, like I said, it's not really like this kind of scenario. It's more like this, where the risk is a little bit more technically, but the reward's much higher, right? So just think about it. Let me know what you guys think, and I'll talk to you guys next time.